Welcome back to the next presentation and a warm welcome from my side to our German Select Conference number 6 today. And I'm happy to welcome our next guest, which is Friedrich Vorwerk. Friedrich Vorwerk will be presented by Tim Harmeister. He's CFO of the company and he will walk us through the company's presentation, touching on key milestones and answering the questions in the Q&A session. You know, the housekeeping note, the conference is being recorded and all participants are in a listen-only mode. If you have questions, please submit them using the chat box on the right side of your screen, and we will address all the questions in the Q&A session following the presentation. And with this, Mr. Harmeister, nice to have you with us today, and I would like to hand over to you. The floor is yours.
Thanks a lot. Hello, everyone, and also a warm welcome from my side. I'm very pleased to have the opportunity today to give you an overview of our group and also comment on the recent Q3 figures. However, for those new to the audience, I'd like to start with a brief overview of the Vorwerk Group. The nucleus of today's group of companies was founded in 1962 in Torstedt, which is about 30 minutes south of Hamburg, where the headquarters are still located today. We are a service provider for the energy infrastructure in 4 attractive segments, which are natural gas, electricity, clean hydrogen, and our so-called adjacent opportunities. From our 14 locations in Germany and 1 in Poland, we primarily serve the transmission system operators, TSOs, such as OGE, Gascade and Gasunie in the gas and hydrogen segments, or Tenet, 50 Hertz, and Amprion in the electricity segment. However, our customer base also includes a large number of distribution system operators, municipal utilities, local authorities, and to some extent also industrial customers such as Siemens or GE. And with these customers, we've been maintaining trusting relationships with many of them for decades. And as you can see in the chart below, we are benefiting greatly from the energy transition across all segments. So in the first 9 months, for instance, we were able to increase the total project volume acquired by almost 50% to 886 million euro. And as a result, our CAGR exceeds 20% over the last years. The next chart shows our range of services by segment. In general, one can say that we transport energy from the producer to the consumer. To do this, we plan, engineer, and build import stations such as LNG terminals and pipelines, each with our own resources, so both in terms of personnel and technical equipment. In addition, a large number of stations, such as compressor stations or gas pressure regulating and metering stations, are required in the grid to transport the gas to the consumer in the desired quantity and desired pressure level. In this field, we also cover all the necessary competencies. And after these infrastructure projects have been completed, we typically offer long-term service and maintenance contracts, which they account for almost 15% of the group's revenue. The relatively new hydrogen segment shown here at the bottom of the slide is basically very similar in terms of construction to the natural gas segment. Here we also realize pipelines and the station structures, but with the distinction that different components and to some extent also different welding procedures are used to meet the different physical properties of the hydrogen molecule compared to the methane molecule. However, electrolysis is a completely new field of business in this segment, since hydrogen is not a primary energy source, but must be first produced from other energy sources and in line with the energy transition, hopefully from renewable energy. Vorwerk was a pioneer in this field already many years ago and delivered actually the first electrolyzer in Germany as part of a pilot project roughly 15 years ago. However, the electricity segment is particularly exciting at the moment. Here, our value creation often begins with the so-called landfall connection, which means the takeover of an offshore cable from wind farms in the North and Baltic Sea on the coasts. And the cable is often then drilled under the dikes in the sensitive coastal areas and then connected to the transmission grid. Furthermore, we are very active in the area of new electricity highways, such as Corridor A and the Südlink, with voltage levels up to 525 kilovolts, as well as in smaller and medium-sized underground cable projects. In addition, we also realize the necessary station structures, such as transformer stations and cable transition systems in this segment. We are not active, however, in the segment of these above-ground power lines. Last but not least, in our fourth segment, adjacent opportunities, we bundle various business activities such as the construction of district heating pipelines, drinking and wastewater infrastructure, biomethane processing plants, or, for example, CO2 liquefaction plants. Especially in this segment, we expect to benefit from the German government stimulus once the necessary planning and permitting procedures are finished. So in today's market update, I would like to briefly present two sub-areas from the adjacent opportunity segments. Firstly, the planned expansion of the NATO pipeline network towards the eastern NATO member states. Poland, in particular, wants to connect to the existing NATO pipeline network and is planning a pipeline network of around 300 kilometers for this purpose. In addition, the existing German NATO grid, which essentially ends at the former inner German border, must be expanded towards Poland. The grid is used to supply the NATO troops with kerosene and other fuels, this could therefore open up further opportunities in the area of pipeline construction in the future. Also relevant for our pipeline construction experts is the planned CO2 transport network, which recently cleared the hurdles in the Bundestag and last week also in the Bundesrat. The network is to be used primarily to export the captured CO2, for example, from the lime or cement industry to countries like Denmark and Norway, where it will then be stored in old gas caverns or in some cases under the seabed of the North Sea. Initial estimates put the investment volume for the German CO2 network at 14 to 20 billion euro. One of the future network operators has already submitted initial plans for 4 sub-projects, such as the Wilhelmshaven corridor and the cluster Elbmündung, but start of construction is not expected before 2028. Yeah, now I'm very pleased to present our Q3 figures, which are very, very good. So after reporting the record revenue in the second quarter, we once again managed to beat that figure in the third quarter, achieving quarterly revenue of more than 200 million euro for the first time. Despite ambitious year-on-year figures, this represents growth of 39%. Although the start of the third quarter in July was a bit mixed due to challenging weather conditions with a lot of rain, this was more than offset in the months August and September. One of the success factors here was our ongoing recruiting success. We hired in this period more than 100 new employees in the third quarter, including a small M&A transaction consisting of 35 employees. From a project perspective, the largest revenue drivers in Q3 were still our large-scale A-North project, followed by a number of pipeline projects, such as the EWA pipeline, as well as several large-scale volume gas pressure regulating stations, which ensured a high capacity utilization for our plant construction division based in Wiesmoor. The consolidated revenue for the first 9 months of the year amounted to 505 million euro, representing growth of 49% compared with the previous year. In both percentage and absolute terms, our electricity segment was once again the growth driver. What is noteworthy, in my opinion, is that the absolute revenue in the natural gas segment increased slightly again compared to previous year, particularly due to a high number of plant construction projects. And the revenue in the clean hydrogen and adjacent opportunity segments is roughly on the same level as previous year. However, the development of the profitability in the third quarter was particularly remarkable. Once again, the already very solid EBITDA margin of 21% in the second quarter was improved by another 4 percentage points to 25.4%. And compared to previous year, this represents an increase of 8 percentage points and a doubling of the absolute EBITDA to over 50 million euro. EBIT margin even rose by 5 percentage points to a new record high of 19%, corresponding to 45 million euro EBIT alone in Q3. All segments contributed to this success, but the largest increases were achieved in the pipeline construction projects. In addition to that, the share of profits from our joint ventures, the Arbeitsgemeinschaften, doubled compared with previous year due to a high number of projects awarded in this specific JV contract structure. Accordingly, a 9-month period closed with EBITDA of 105.8 million euro, corresponding to a margin of 20.9% and adjusted EBIT of 87.3 million euro, or an EBIT margin of 17.3%. These results include minor catch-up effects in the mid-single-digit million euro range from variation and change order negotiations, which were finished in the third quarter, but the vast majority was achieved with the ongoing projects, fueled by the very high-quality order backlog. So if we take a look at the development of order intake, some of you may already have seen that we've introduced a new KPI with the half-year figures, the total project volume acquired. And I would like to once again use the opportunity to explain the difference between the two key figures, order intake and total project volume acquired. Basically, there are two different types of project structures. In the first alternative, Vorwerk acts as a general contractor and handles the entire project through its own P&L statements, which means that 100% of the order value goes into order intake and will translate it later into revenue with all the associated costs in the P&L, like costs for subcontractors, energy, materials. And the second option, the client awards the entire project to a joint venture. And on this constellation, we do not show the proportional share of the total order volume in the KPI order intake. Instead, we are only allowed to show the supply of personnel and equipment to the joint venture, which can in some cases be significantly lower than the proportionate share of the total project. The conventional order intake, therefore, does not reflect the actual project volume handled by our group, which is why we also report this new key figure. And this KPI also includes the proportionate project volume from the joint ventures in which Vorwerk is involved, and therefore, in our opinion, provides a more transparent view of the actual order situation, regardless of the type of the contract structure. And looking at the actual figures, the total project volume acquired rose by 45% to 886 million, while conventional order intake at 419 million euro is around 20% below the same period last year. The main reasons for this are, on the one hand, the shift in order structure towards more joint ventures, especially in H1 this year, and on the other hand, our already well-filled order book. Nevertheless, we've also acquired many new and attractive projects. Two of them I will show later on in this presentation. The order backlog, which corresponds to conventional order intake, declined slightly to 1.1 billion euro for the reasons stated before, and currently consists of around 70% order volume attributable to the electricity segment. In addition to the strong development in both revenues and profitability, the development of net cash is impressive as well. Compared to Q3 2024, we've increased net cash by 80 million euro to 112 million euro, thereby creating an excellent basis for further organic and acquisition-driven growth. The main reasons for this significant increase are, firstly, the higher profitability, secondly, an improved negotiation position with regards to payment terms, and thirdly, improved working capital management with regards to our internal processes and the project controlling. And based on the strong performance in the current year, especially in the third quarter, and an unchanged positive outlook, we raised our guidance already for the second time this year, a few weeks ago. And we now expect revenues in the range of 650 to 680 million euro and an EBITDA margin of 20 to 22%, which corresponds to a margin improvement of another 5 percentage points at the midpoint year on year. Well, so let's move on to two new projects that we've recently acquired in the business update. First, we have here the ETL 179, an 18-kilometer long pipeline that runs around the city of Stade and will be built in parallel to the already acquired ETL 182, which is an 86-kilometer long pipeline. And at the beginning of the year, we purchased a small site in Stade. So this was the Rode acquisition with around 40 employees. And these employees can directly integrate into the execution of this project and thereby creating a very high utilization of this new acquisition. The second project I'd like to present is the district heating pipeline, or at least a part of it, which is representative of a large number of other projects that will need to be implemented in the coming years as part of the municipal heat planning. The challenges associated with these inner city construction projects include a large number of existing underground infrastructure, most of which have to be relocated, as well as the significantly limited space available and traffic regulations that must be observed. However, we feel very comfortable with these projects and can contribute our entire expertise in inner city pipeline construction, cable construction, and civil engineering combined in one project. To conclude today's presentation, I'd like to briefly mention our subsidiary 5C Tech. Within this company, we pool our welding expertise and have been working since the end of 2023 on the development of a fully automated welding system, which has been in operation since the beginning of 2025. We initially used the new technology in one of our own projects, the EWA pipeline, with such great success that we started renting out this technology worldwide in summer this year. And we are currently working in southern Turkey and already have several follow-up projects planned for next year. Main advantages of this machine are its higher quality, higher speed, given this dual torch technology, and of course, the fact that it requires significantly fewer welders who are very difficult to find on the market these days. Yeah. And with that, I would be happy to open the floor for your questions.
Yeah, that's perfect. Thanks a lot, Mr. Harmeister, for the insights you have provided so far. And as a brief reminder, please use the chat box to submit your question. And we've received a few questions already, and I would like to start with the first one. Do you expect a strong revenue and earnings growth from 2025 to continue in 2026? And maybe I can add a brief question. What are the main drivers for revenue growth in the future?
Well, first of all, we didn't have published official guidance for next year. This we will do together with the preliminary earnings at the beginning of next year, since we are still expecting or waiting for some tender decisions. Generally saying, our potential to grow the revenues is mainly linked to our success in recruiting, because there are only limited variables of scalability. So to acquire more projects, we also have more people, especially blue-collar employees, on board. However, we were pretty successful this year again in hiring. As of Q3, we were able to increase our headcount by 13% compared to end of 2024. So probably we will see a 15% headcount for the full year 2025, and therefore it's expected to see the company growing again. However, the ratio of revenue to headcount growth is not like 2.5 to 1 as we have seen this year, but you can rather expect like with a 15% headcount growth, rather expect like 20% revenue growth, for example.
If I got it right, there was a headcount increase by 100% and 100% in this year. You have mentioned at the beginning of the presentation. A quite related question, given that you're operating near full capacity, how were you able to achieve 49% revenue growth in the first 9 months when increasing the headcount by only 13 to 15%? And maybe also look into the future, does the higher volume of staff have an impact on your margin?
Well, this year was somewhat special in terms of revenue growth due to differences in the contract structure. So we were able to have a higher share of equipment used within the projects. So also a lot of the revenue growth was linked to the use of equipment. For example, our new welding robot I just presented. And to some extent also we have higher revenues if we have higher shares of materials, or to some extent also subcontractors in the projects. But this is individual from project to project. Therefore, please do not use this ratio, revenue growth to headcount growth from this year. As I said, sustainable ratio would be more like 20% revenue growth compared to 15% headcount growth.
Thanks for the clarification of this question. Going to the next question is, you and other insiders have sold significant shares recently. It has been over the past 5 months. Does the management believe the company is now at its operational peak, or is there any other reason for the sale?
Well, what is what is significant? So for me personal, I still own the majority of my shares, and I've just sold a few as part of a portfolio rebalancing. Whereas our CEO, for example, hasn't sold any of his shares. So of course we are fully committed to the success of the company.
Okay, thanks. Another question regarding the outlook and the order book. With such a full order book, now how much flexibility do you have in choosing projects? Can you now focus only on high margin projects, or are there limitations to this approach?
Yeah, well, given the strong book we already have with the 1.1 billion for the next years, a large part of our resources for the next 2 years is already booked out. However, we still keep some capacity as a reserve to react on these opportunities on the market. And of course, our approach would be to use this reserve capacity to get the best projects in terms of expected project profitability and utilization of the available resources. Yeah, so you can basically say we try to cherry pick the best projects now.
Perfect, thanks. Talking about the year 2025 and Q4, can you please comment on current trading?
Well, most of you know there's some seasonality underlying in our business model. So Q4 is usually weaker in terms of revenue compared to Q2 and Q3, given the fact that we usually stop the construction sites at beginning or mid-December, depending on the individual weather conditions in the regions. So however, we have seen in the last 2 months, we've seen a lot of rain, but this is not unusual for the autumn season. So there's nothing special to expect for the Q4.
Okay, thanks. The next question regarding the 5C Tech PX2 robot. What is your ambition for international, I guess it's international sales?
Yeah, well, first of all, we do not want to sell this technology. Instead, we are renting out this technology to other pipeline construction companies outside of Central Europe. So within Central Europe, we've used this technology exclusively for our own projects, which gives us a competitive edge. But outside from Europe, there's a large potential. For example, there are large-scale pipeline construction projects ongoing next year in Kazakhstan and Canada, even in Latin America. And we usually get paid per weld with this technology. And on a midterm, we expect to have revenues from renting out this technology in the double-digit million euro range.
Perfect, thanks. Speaking about M&A, how realistic is a smaller or bigger acquisition in 2026, and how are the prices developing for potential targets?
Given the cash reserve on the balance sheet we accumulated over the last months, we would be happy to do either mid or large scale acquisition in the next year if there's an opportunity for that. We have different options on our target list at the moment where we are in different stages. However, there's a trend. If the target is larger, we typically are facing competition from private equity investors, which tend to pay higher multiples as we do. So therefore, it's more likely to do these smaller acquisitions, smaller to medium-sized acquisitions like we did in the past, because the competition is not that large, and usually these are succession things where we have good connections to the former owner of the business, and we can directly integrate his employees to our group. But generally saying, of course, M&A is still one of our growth ambitions for the next years.
Perfect. Thanks a lot. And with this, we are not running out of time yet, but actually out of question. We've answered all the questions which came in. So it has been a pleasure for me, Mr. Haumeister, having you here today, and for all participants. We're covering the company, and you will find the research on research-hub.de. So if you have any further interest in the company, feel free to read the research. And we will continue after a short break at 1:30 with the next company, which is Mutares, and I'm happy to see you there again. And Mr. Haumeister, I would like to hand over to you for some final words.
Yeah, thanks a lot for listening and for interest in our company. Now I wish every one of you have a good lunch break. See you soon.
See you soon. Thanks a lot.